Well, it's hard to follow so many great speakers. And this talk is very special to me for two reasons. One is it's not about my main business. And the second is it's my birthday today. So if there's only one thing I had to say today, it's that everything you do as an entrepreneur matters. Everything you do. Your smallest success, your biggest failure, everything contributes to what you do in the future as an entrepreneur. I'm going to tell you about my experience in one field which helped me so much in some things I did in a completely different field. And this touches so much on the not-for-profit world. I grew up in India, where growing up you were taught to grow up to either be a doctor or a lawyer or a failure. So you follow one of these paths. Frankly, I didn't know what I wanted to be. I studied aerospace engineering. I worked for an options trading company, got into the movie rental business. I mean, life couldn't be more random if you wanted it to be. Right after I graduated, I basically started working for an options trading company, creating models for trading options. I learned a lot from my aerospace engineering degree to do that. Interestingly, right after that, after a couple of years of doing that, back in maybe 2003, I joined two other friends of mine in starting this company called Get a Movie. And at Get a Movie, we basically started building DVD kiosks for movie rental. We did a deal with McDonald's in 2005. And basically, we had the technology. They had the money and the management, so we combined forces and created what is essentially Redbox. Redbox grew from less than probably $1 million in revenue in 2004 to close to $1 billion this year. It grew at an astronomical rate. It grew at 2005, it probably did about 12 million revenue. 06, 45. 07, 145, 08, 360. You know, it's the actual hockey curve that entrepreneurs dream of. And I didn't think that when we wrote the business plan for that company, I didn't think that the main investor in a company like that would be a company in the hamburger business. Who'd have thought? You know, you can't write that as a fiction novel if you wanted to. But the lesson I learned from that is you have to pay attention to everything you do. You have to look at different opportunities. You can't just be narrow-minded as an entrepreneur. And today I'm lucky to do what I'm doing. I'm the CEO of one of the most innovative brokerage companies in the US. We help retail investors trade options. We do something very different than most other companies there. But that's not what I'm really going to talk about. I'm going to talk about my plan to go to heaven. And in 2002, basically, I got involved with a group in Chicago which was pretty instrumental in education reform. So this was the largest charter school in Chicago. I was very involved with them, and by luck and accident, I got involved with another group which was trying to do this, bring school choice and reform to India. And in India, there are 1.1 billion or 1.2 billion people and 100 to 150 million kids who don't go to school or go to very bad schools. These are very poor children. Their parents probably live on less than $2 a day. So 150 million children, that's about half the population of this country. And what I want to talk about is how some of the things I learned from the financial markets helped translate to what we did for this nonprofit that's doing work in India. So we started this nonprofit. It's called Vidya Grants. We started this nonprofit earlier this year. And basically what Vidya Grants does is it provides scholarships for poor children to go to affordable private schools. It provides these by enrolling these small schools started by poor entrepreneurs in the communities these children live in, enrolling them on a website, and allows donors in the US, Europe, or anywhere in the world to donate scholarships. And these scholarships are about $100 per child per year. That's the tuition for one child to go to school for a year, $100. So the things to come up with this model, I basically learned a lot from the financial markets. The first thing I learned is capital needs to get to entrepreneurs. Every successful economy has entrepreneurs, ideas, and capital. If you look at the poorest country in the world, I'm sure there are entrepreneurs and ideas, but they don't have an efficient way to get to capital. The US probably has one of the most efficient capital markets in the world, and that contributes a lot to our success. And so my thought in doing this was there needs to be a way for social entrepreneurs to have an efficient way to access capital. Who are the investors investing in social entrepreneurs? Not investors looking for a financial return, but a social return. So we basically ended up creating what is like a social exchange, an exchange for social capital. So that's the first thing I learned. The second thing is, in creating any sort of market, you need to create credibility in that market. Investors are always looking for credibility in what they invest in. So what we did is we have all these small schools in communities in India. These are schools that serve between 50 and 250 children. They're not sophisticated. They're very low tech. Don't have much in terms of facilities, funding, infrastructure. So we partnered up with another organization and basically started rating these schools, giving these schools a rating almost like an S&P or Moody's would do. So just like a GM or Ford or Microsoft would get a AAA rating, we started giving these schools a rating of an A, B, C, D. So that way we established some form of credibility in this market. The third thing is it's important to create competition. If you look at the top 10 companies or the top 50 companies in the Fortune 100 or the S&P 500 50 years ago, that list is completely different than the list right now. In any market, there needs to be good competition. And that's the same thing we do with our school system. We don't tell the schools how to run. We don't tell them exactly what they have to do. We just create an ecosystem and we create competition. So the good schools rise to the top and the bad schools start falling down. Any good market always has to foster creation and destruction in some way. Point number 4 is, if you look at the financial markets in the US 50 years ago, most of the players in these markets were institutional. So they were a mutual fund, a pension fund, somebody who did this for a living. Most individuals invested in a mutual fund, invested in a pension fund, and these were the entities basically buying stocks. Fast forward 50 years, a lot of investors now in our markets are retail investors because of the internet and because of the easy access to information that everybody has. And I looked at how this is applicable to us. 20 or 30 years ago, if you wanted to do anything about education reform, school reform, in India, in Africa, in China, you had to be a big institution. You had to be the World Bank, the IMF, UNESCO. Basically what we did is we democratized the process by having an online website. An individual, somebody in Iowa City, could give $100 and make a big difference to education in a place that they would never visit. So we made this big shift from institutional to retail in charity. And my last point on this is, and this is something that's very true for entrepreneurs. You know, I looked at charities traditionally. You look at charities and a lot of charities pitch for money, and you see the same charity pitch for money every year. It seems like an endless loop of giving. And there is no end game. Because what happens in a lot of charitable giving is people are giving for some sort of intrinsic motivation for the recipient. And what I mean by that is, you tell somebody you should send your kid to school because it's good for you. As long as you're telling somebody you should send your kid to school because it's good for you, it's a motivation that becomes just like an endless cycle of giving. It doesn't really solve the problem long term. So we focused on more of an extrinsic motivation. So we wanted to focus on we wanted to focus on schools which are making money by educating kids. So the more kids that they enroll, the more money they would get. So we decided to focus on extrinsic motivations versus intrinsic motivations. And this, every entrepreneur knows about. So what I want to basically end by saying is, there's a lot I learned from everything I did in the for-profit world that was so applicable to the not-for-profit world. And I think this applies to all of us as entrepreneurs. We should look at every opportunity. We should take every call, open every door, because you never know where this path will lead us. And I learned myself, at least, that I learn a lot more from my failures than my successes. There's so little I learned from my successes. Because success doesn't really tell you. You could be really lucky when you're successful. But I learned a lot more from my failures. I learned to follow these random paths. And because you never know where this leads. So, thank you.